Bookkeeping. It's the lifeblood of any successful business. Without it, you're flying blind. But what exactly is it? Simply put, bookkeeping is the process of recording all your financial transactions. Think of it like a financial diary for your business. Every purchase, every sale, every dollar in and out gets jotted down. This meticulous record keeping forms the foundation of your business's financial health. Why is this so important? Because without accurate and up-to-date financial records, you can't possibly understand the financial position of your business. And if you don't know where you stand financially, how can you expect to make informed decisions about your future? Bookkeeping is not just about crunching numbers. It's about gaining clarity, control, and confidence in your business's financial well-being. Now that we understand the why of bookkeeping, let's delve into the how. At its core, bookkeeping is about meticulously tracking every single financial transaction your business makes. This includes everything from the money you earn from sales, your gross receipts, to the money you spend on supplies, rent and utilities, your expenses. It also encompasses your assets, which are things your business owns, like equipment or inventory. Employment taxes, the contributions you make as an employer towards Social Security and Medicare, are also carefully tracked within your bookkeeping system. By diligently recording these transactions, you create a comprehensive financial history of your business. This detailed record provides invaluable insights into your cash flow, profitability, and overall financial performance, allowing you to make informed decisions and steer your business towards success. Debits and credits. These two fundamental accounting concepts might sound intimidating, but they're actually quite straightforward. Think of them as the two sides of every financial transaction. A debit increases an asset or expense account while decreasing a liability or equity account. A credit, on the other hand, increases a liability or equity account while decreasing an asset or expense account. For instance, when you make a sale, you debit your cash account, increasing your assets, and credit your sales revenue account, increasing your equity. Understanding the interplay of debits and credits is crucial for maintaining accurate financial records. They ensure that your accounting equation always balances, reflecting the true financial position of your business. The accounting equation. It sounds complicated, but it's really the bedrock of accounting. This simple equation, assets equals liabilities plus owner's equity, provides a snapshot of your business's financial health at any given moment. Let's break it down. Your assets are everything your business owns, like cash, inventory, and equipment. Liabilities, on the other hand, are everything your business owes to others, such as loans or unpaid bills. Owner's equity represents the owner's stake in the business. The beauty of the accounting equation is its balance. It always holds true. Every financial transaction affects this equation, but it always remains balanced. This balance ensures that your financial records are accurate and reliable. By understanding the accounting equation, you gain a deeper understanding of your business's financial position, enabling you to make informed decisions about your assets, liabilities, and overall financial strategy. Section 5. Types of accounts. Categorizing your business finances. In bookkeeping, we use different types of accounts to organize our financial information. Think of them like labeled drawers where you store your financial data. The main types are assets, liabilities, and equity. Assets, as we've learned, are things your business owns that have value. These can be current assets like cash, which you can easily convert to cash, or fixed assets like equipment, which have a longer lifespan. Liabilities are your business's obligations to others, like accounts payable, which is money you owe to suppliers, or long-term debt. Equity represents the owner's stake in the business. It reflects the amount of money invested in the business and the accumulated profits. Understanding these account types is crucial for accurately recording transactions and generating meaningful financial statements. By categorizing your financial data, you can easily track your assets, manage your liabilities, and monitor your equity, giving you a clearer picture of your business's financial health. Section 6. The power of records. Why keeping track matters. Why are meticulous records so vital in the world of business? The answer is simple. Knowledge is power. Accurate and up-to-date records provide invaluable insights into your business's financial performance, empowering you to make informed decisions. Without proper bookkeeping, you're essentially navigating your business in the dark. You won't know your profitability, your cash flow, or your overall financial standing. This lack of information can lead to poor decision-making, missed opportunities, and even financial troubles down the road. Solid bookkeeping practices, on the other hand, bring a multitude of benefits. They enable you to track income and expenses, identify trends, and spot potential problems before they escalate. In essence, meticulous record-keeping is the foundation upon which you build a successful and sustainable business. Section 7. Bookkeeping and Budgeting. Planning for a brighter financial future. Budgeting is like creating a roadmap for your business's financial journey. And guess what? Bookkeeping provides the fuel that keeps your journey on track. Without accurate financial records, creating a realistic and effective budget is virtually impossible. Think of it this way. Your bookkeeping records provide historical data on your income and expenses. This data is like looking in the rearview mirror. Budgeting, on the other hand, is like looking through the windshield, planning for the future. By analyzing your past financial performance through bookkeeping, you gain valuable insights into your spending patterns, revenue streams, and areas where you can cut costs or boost revenue. This information is then used to create a budget that aligns with your business goals. In essence, bookkeeping and budgeting work hand in hand, providing you with the financial clarity and control to steer your business towards a brighter future. Tax time triumph. How bookkeeping makes taxes less taxing. For many business owners, tax season can feel like a looming storm cloud. But with organized bookkeeping, you can weather the storm with ease. Accurate financial records are crucial for preparing and filing your taxes correctly and on time. When you have a clear record of your income, expenses, and other relevant financial information, tax preparation becomes a much smoother process. You'll have all the documentation you need to substantiate your deductions, avoid costly errors, and potentially even reduce your tax liability. Moreover, organized bookkeeping can be a lifesaver in the unfortunate event of an audit. By providing the IRS with clear and accurate documentation, you can navigate the audit process with confidence, knowing that your financial house is in order. In short, bookkeeping is your secret weapon for conquering tax season and achieving financial peace of mind. Smart decisions. Start with solid numbers. In the world of business, every decision, big or small, has financial implications. Whether you're considering a new product launch, expanding into a new market, or hiring additional staff, reliable financial data is essential for making sound decisions. This is where bookkeeping comes in. By providing you with accurate and up-to-date financial statements, bookkeeping equips you with the insights you need to evaluate different scenarios, assess risks and rewards, and ultimately make choices that align with your business goals. For instance, if you're thinking about expanding your product line, your bookkeeping records can show you your current profit margins, sales trends, and available capital, allowing you to determine if the expansion is financially feasible. In essence, bookkeeping acts as your financial compass, guiding you towards strategic decision-making that fosters growth and profitability. Keeping investors in the loop. Investors, whether they're silent partners or venture capitalists, have a vested interest in your business's financial health. They want to see that their investment is being managed responsibly and that the business is on track to achieve its financial goals. This is where transparent and accurate financial reporting comes into play. Investors rely on financial statements such as income statements and balance sheets to assess the performance and financial stability of your business. Bookkeeping provides the foundation for these crucial financial reports. By maintaining meticulous records, you can generate accurate and timely statements that instill confidence in your investors, demonstrating transparency and accountability. When investors have access to reliable financial information, they're more likely to continue supporting your business and potentially even increase their investment. In short, solid bookkeeping practices are essential for building trust and attracting capital. Bookkeeping, your path to profit and growth. In the grand scheme of your business, bookkeeping might seem like a small cog in a large machine. But don't underestimate its importance. It's the foundation upon which you build financial stability, make informed decisions, and ultimately achieve long-term success. By embracing sound bookkeeping practices, you gain a crystal-clear understanding of your business's financial performance. You can track income and expenses, identify areas for improvement, and make strategic decisions that drive profitability. Moreover, bookkeeping simplifies tax preparation, keeps investors informed and happy, and provides you with the financial insights you need to secure funding and fuel your business's growth. In essence, bookkeeping is not just about crunching numbers, it's about empowering yourself with the financial knowledge and control to turn your business dreams into reality.
Commit your way to the Lord, trust also in him, and he shall bring it to pass. Psalm 37 verse 5. I can do all things through Christ who strengthens me. Philippians 4 verse 13.